listen-only mode.
Hello, hello, everybody. Are you guys all able to hear my voice and see the screen right now? Just a little, give a little shout out here in the chat box, if you can, for those of you that are here. Hello, hello. Alrighty, so we did have a scheduled start time of 12 p.m. here in Chicago time, but I want to wait just probably like another 90 seconds or so I can make sure that everyone that wants to get here can come in and see the presentation from the very beginning. We're going to be talking about binary options today, obviously, but we're not really going to be going over too much in depth about the actual mechanics of binary options. We're not really going to touch too much on that beginner level stuff. What I want to talk to you guys about today is actually one of the technical indicators that I love and use in my regular trading on a daily basis. And when I say my regular trading, I mean my binary options trading, my equity options trading, everything I trade, I use this technical indicator to get some information on the market that I think is kind of unique and novel relative to what else other indicators that you would typically use and find out there. And luckily for us, it's built in to the Nadex trading platform, which is really, really great. And they actually have a very nice implementation of this technical indicator that I find to be really, really useful. So we'll get started here now and jump underway here. As I go through the presentation, please, please, please feel free to ask any questions. Don't worry about interrupting me. I really kind of like this to be more of like a town hall or a conversation with you guys rather than me just reading off the slides the whole time. I'd rather go over something and stop and kind of go into detail if someone's confused, because if I know one person has a question, I guarantee that there's at least a few other people that have the same question and just want to ask. All right, so let's go ahead and jump right on in here now. I'm going to go ahead and read our risk disclaimers. Futures, options, and swaps trading involve risk which may result in financial loss and are not suitable for everyone. Any trading decisions that you may make are solely your responsibility. The information presented in this webinar is for informational purposes only. The contents of the webinar are not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered on Nadex. Past performance is not indicative of future results. And I'm also going to read our standard boilerplate risk disclaimer. Day trading, short-term trading, options trading, and swaps and futures trading are extremely risky undertakings. They generally are not appropriate with someone with limited capital, little or no trading experience, and or a low tolerance for risk. Never execute a trade unless you can't afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades or recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Please contact your broker or registered investment advisor for execution margin and all other capital requirement questions. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and alphashark.com. So as you guys can see, I'm clearly a little bit quicker with that one. So my name is James Romelli. I think some of you might know who I am. I think I probably have spoken to some of you guys in the past, but I'm an active trader in stocks, options, and binaries here at Alpha Shark Trading. I trade all day long. I watch the markets all day long. And if you don't know who I am, maybe you've seen me on TV. I regularly go on CNBC, Bloomberg, Fox Business, PNN Canada. It's been a little while since I've appeared on TV because I've been focused a little bit more on trading recently. But I also write for Futures Magazine, Active Trader Magazine, Resource Investor, CME Open Markets, and I post videos on a daily basis to on a weekly basis to the Nadex blog. So you may have seen some of the stuff I do there. I typically focus on trade setups on the open and breakout type patterns using the Ichimoku Cloud. Binaryoptions.nadex is where you can see all of that content, not only from me, but from a ton of other contributors that have some great stuff that gets put up there on a daily basis, covering a really wide variety of markets. I pretty much focus on equity indices, but as you'll see as we kind of go through this, binary options kind of open the door to pretty much every market in the world that you might be interested in trading and couldn't for whatever reason. We're kind of going to go over that in a little bit here. But one thing that we always say, if you want to be more powerful in life, educate yourself. It goes for trading, and that also goes for life. So this is the reason that we put on these presentations, is I am constantly trying to learn more about financial products, about different types of trading strategies, and as I learn more, I grow my trading knowledge and knowledge base by teaching other people as well. If you really want to learn something, the best way to do it is to prepare yourself to explain it to other people. So that's why I really like to do these presentations, and I'm very glad that you guys took some time out of your day to be here. So we're going to go over a table of contents here, and I'm, like I said, I don't like to do like a super structured type of presentation, because I like to be able to answer the questions that you guys have and discuss the comments that you have as we go through. But generally, this is how we're going to go through things here today. We're going to talk about binary options. We're going to talk about a couple of simple trade setups and the pros and cons of binary options versus futures. I'm going to show you guys how the Ichimoku Cloud works, not only on a conceptual type of basis, meaning how the different levels are calculated and how the indicator actually functions, but I'm also going to show you how it works in the Nadex trading platform. And then we'll kind of do a wrap-up and a Q&A at the end of the presentation here. But most of you, I would imagine, know already what a binary option is. Some of you might be the most beginner level traders when it comes to this product. Maybe you're here just because you're interested in what these are. And your understanding of binary options and what they are and how they work could be completely different from how they're actually traded and how the settlement processes and actual trade execution processes work on the Nadex platform. But binary options are financial instruments that pay off at a fixed amount or nothing at all, right? And that's where the term binary options comes from. There's only two different scenario settlement values on expiration for the binary option. Now, that doesn't mean that it can only trade at 0 or 100. Obviously, these markets fluctuate as the underlying asset that the binary option is based on moves, and I'm able to trade in and out of these as actively as I want to. I don't have to put a trade on and hold it to expiration and experience that max gain or max loss. There's a lot of different ways I can manage the trade before expiration. We're going to talk about that as well. But the definition that Nadex uses is a contract that asks a simple yes or no question. Will this market be above this price at this time? Yes or no? If I think yes, I'm going to buy that binary option. If I think no, I'm going to be a seller of that binary option. And then I'm going to have a fixed risk versus reward profile that isn't going to change and that is going to allow me to manage my risk in a way that you really can't find in futures or options on futures, and also take views on the market using intraday expiries that I wouldn't be able to do with other types of financial instruments. We're going to talk about all of this more in depth, but when we get to the end of the presentation, the one thing you're going to realize about binary options and Nadex products is that they give a trader choices and access. That's like the two main things that I think are the biggest benefit of understanding and being able to use these products is choices and access. Access meaning I can trade any market I want to, choices meaning I can really express any type of view on that underlying market with a better reward to risk ratio and with less capital than I would be able to in futures. And we're going to go over some of those examples here as well. So simply put, Nadex binary options have two fixed settlement values possibilities on expiration, 0 or 100 bucks. A trader can buy or sell them for a price in between 0 and 100 up to expiration, and the contracts are standardized, and expiration, the settlement process is consistent based on the underlying market in which the option is listed. This provides a trader with access to a number of markets that they might not be able to trade otherwise. Let me ask you guys this. How many of you in here are really interested in, or if you have the capital, would be interested in trading something like crude oil futures or other types of commodities like grains and agricultural futures? Right, yeah, I mean, those are markets that everyone is interested. How many of you want to trade those markets but can't because of the amount of risk that you really are kind of required to take on to trade futures in crude oil or in grains or even in equity indices. I, for one, am not someone who can stomach the swings in the crude oil market. I wouldn't be able to take on the number of contracts that my trading plan and risk management strategies would want me to take without taking on a huge amount of risk. And this is what I'm talking about with access. We're able to do this with binary options, and I can do this and really express some pretty complex views on the underlying markets that I wouldn't be able to trade otherwise using these binary options products. So this is what the main benefit of these binary options are. It allows me to take the strategies that I use in other areas of trading and apply them to markets where I wouldn't be able to otherwise. And we're going to get into that with the Ichimoku Cloud a little bit later on. But here's an example in case any of you are really kind of unclear still on how these work. Let's say that we have the S&P futures, the E-mini S&P 500 futures trading at 2077.5. Okay, if I buy the US 500, and that's what the E-mini S&P 500 binary options are called on Nadex, the US 500 greater than 2080 daily binary option at 40. What is my risk and reward, and what is my actual trade exposure here? Well, what I'm saying with this trade is that I expect that the market will be above 2080 at expiration of this option. The daily expiration happens at the end of the day, the close of the futures trading. Not the close of cash equities, but the close of the S&P futures, okay? I know that there's only two possibilities for settlement. Either it goes to 0 or it goes to 100 on expiration. So my maximum risk and maximum reward are never going to change once I put this trade on for 40. I can never lose more than $40 per one lot, and I can never make more than $60 per one lot. But as you can see here, this is an example where I can get a move in the underlying futures that really isn't that large relative to where the market was trading at the time that this example was created, and my risk versus reward is my reward versus risk here is 1.5 to 1. That's a pretty good ratio. For those of you that day trade stock or futures, how difficult is it to consistently set up a trade where I can get a multiple potential reward against my risk? It's pretty tough, right? It's pretty tough. And it's really difficult to do that because of the nature of risk management with futures and stocks, right? I have to use stop losses and hard stop losses. And if I get stopped out of a trade, then I no longer participate. But what's really nice about binary options is, let's say that, here we have the market set up and trading. Here's 2077.5. What happens if I buy futures here with a stop, at this support level? Well, if the market trades below this level, I get taken out. Let's say we have a little bit of a flash crash situation where the market sells off, takes out my stop, and then comes right back. Well, my futures trade, I'm out. I'm no longer participating. But because I know what my maximum risk is in my binary options trade, well, I can stay in this. I know that I'll never lose more than $40 per one lot. So it also gives me staying power that I wouldn't be able to have in regular types of futures trade setups that would require me to use a stop loss. On expiration, if the market is above 2080 on expiry, it settles at $100 and I make $60 and $40 worth of risk. If it settles at or below 2080, then I lose this $40. Now, it doesn't matter if the market, settles at 2079 or at S&P 5, right? I still can only lose $40 per one lot. So that makes the risk management considerations that I would be making here a lot simpler, because I don't really have to think about anything other than this original risk and reward setup. I know what that is going to give me exposure to, right? So as you can see, contract sizes are going to be the same no matter the underlying market. And I'll show you here on the Nadex demo platform, if you guys can all see this here. If I go to the indice binaries, if I'm talking about daily options in the S&P 500, you can see all the markets are going to be trading between 0 and 100. If I talk about the NASDAQ, again, the contract sizes are the same. If I talk about the Russell or the Dow, the contract sizes are all going to be the same. And in Options on futures, that's not the case. I have to understand what all the contract sizes are, what all the tick values are, and for someone that wants to be active and involved in a lot of different markets, it can make your risk management considerations a lot more complicated. You have to be aware of all of that at all times and actively manage these contracts that aren't really standardized across markets, right? Binary options take away that headache and allow me to work with contracts that are all going to settle using the same possible expiration values, and the tick sizes are going to be the same as well. Okay, so what's really nice about these as well is that the amount of capital that I need to trade binary options is so much smaller than it is for futures. If I know that a crude oil future is going to move with a tick value of $1,000 per point, meaning if I buy one crude oil future, get long, and the market sells off $1, I'm down $1,000 in that position. How much capital do I really need to have in reserves to be trading like that? Quite a bit, right? You know, I would say that for me to trade crude oil futures, I would probably want to have $10,000 or $15,000 in capital per one lot that I would be looking to take on, right? My margins are going to be much smaller than that, but in terms of risk management and capital allocation, that's a huge amount of risk to take on. Because binary options can only settle at 0 or 100, the contract sizes are relatively small compared to the options on futures and the underlying futures. But what's also nice about them is if I'm someone who's trading index ETFs or commodity ETFs, I'm still subject to pattern day trade rules. So they make it very difficult for traders with small amounts of capital to day trade. If I'm trading futures, I don't have enough cash to really handle the swings and risk that I'm required to take in the futures market. And if I then decide to trade ETFs or index options, I can't day trade them. I'm not given the ability to manage the positions like I would want to, right? Binary options are not subject to those pattern day trade rules. So if you're someone that wants to trade indices on a daily basis and day trade something like the SPY, but you don't have $25,000 in capital, then you're not going to be able to do that. It's not something that you can do. The regulations keep you from doing that, but that's not the case with binary options. So before we jump into the actual explanation of the Ichimoku Cloud here, that's kind of the only part that primer that I wanted to do on binaries. Is there any questions that anyone has at this point about anything we just went over? Because if you guys don't understand like the general and basic concepts of a binary option and how it works, then I want to make sure that that's clear before we move on to something else here. So does everyone follow along so far with what I've just said? Is everything making sense to everyone? Feel free to throw a question in here if you have one. Okay, cool, perfect. So because binary options give me all this flexibility to trade markets that I otherwise wouldn't have the capital to or wouldn't want to take on the risk to trade, I can use ideas and techniques that I would apply to those markets if I could in binary options. And in my opinion, one of the best technical indicators around for trading on a day-to-day basis or on a short-term basis is the Ichimoku Cloud. And before we jump into this here, how many of you have never ever heard of the Ichimoku Cloud as a technical indicator before? How many of you have never ever heard of it? Have no idea what it is, never seen it before? New one to you? Okay, good. So a couple of people have never seen it before, never heard of it. It's an indicator that's been around for a long time, but the Ichimoku Cloud is something that I think is one of the best indicators to apply to all markets, and that's what makes it such a nice and natural type of tool to use with binary options. Binary options let me trade any market I want, right? So I would like to have a tool in place that is going to be applicable to all of those different markets, right? Obviously, some indicators that work on crude oil might not work on gold or silver or indices or overseas indices, but the Ichimoku Cloud, because of the nature of what it looks for, works pretty well with all of these things. The things that I have to understand are the different considerations that I make per product and time frame, and we're going to go over all of that as well. So Ichimoku Cloud is a technical analysis method that uses past, present, and future to help traders identify at a single glance if a security is in bullish or bearish territory. And the actual full name of the study is Ichimoku Kinko Hyo, and that translates to one glance equilibrium chart. So the whole design of the indicator is meant to let me know at one glance, and I literally mean at one glance, within 10 seconds, whether or not a stock, future, currency pair, what have you, is in bullish or bearish territory. And the cloud makes that determination by using 6 key components. We're going to look at those individually, and then combining them to create this overlaying technical indicator known as the Ichimoku Cloud. So let's take a look at crude oil futures here on the daily bar. And I know that the daily bar isn't quite as applicable to Nadex products because most of the expirations are intraday, but I use the daily bar here because it's a little bit easier to see in this webinar format what the levels look like and where the different components are. Okay, but we'll go over what the cloud looks like in the Nadex platform in a little bit here, more towards the end. So here we have the Ichimoku Cloud. For those of you that may not have known the name right offhand, how many of you have seen this before? Now that you're looking at it, can say that you've seen it before or that you might have come across this. It is something that's available now, and it didn't always used to be this way, now available in most retail brokerage platforms. So if you trade stock or futures through some big risk discount retail broker, you probably have access to this. And there's also places where you can get it online for free. And if you take a look at what I have here, this is from a site called tradingview.com that allows look at the daily bar and things like this for free in any product. And here we have crude oil. So it can look kind of intimidating to people that are unfamiliar with it because there's a lot going on here, right? A lot of colors, a lot of lines. But I can explain to you very quickly how to read this, right? It's one of those indicators where I can talk about this and explain it to someone and give them an easy working knowledge of how it works in 30 seconds, or if I really want to get involved, I could talk about it for 3 hours. But if you take one thing away from this and one thing only, take away this point right here. The one glance equilibrium that we're supposed to be able to figure out by looking at this chart is whether or not this is in bullish or bearish territory, and it's easy to do that. Anything trading above the shaded area that you see here is in bullish territory. Anything trading below the shaded area is in bearish territory. And an easy and simple trading plan that I use with this, and something that I use to guide my trading and other things as well, is looking at where the breakouts to the upside and downside happen in this cloud. Well, let's talk about the individual components here as well, and I think it'll be a little bit more clear what we're looking at. There's 6 components to the Ichimoku Cloud: the Tenkan-san line, the Kijun-san line, the Sanku Span A line, the Sanku Span B line, the Kuhmo, and the Sanku Span line. Now, you don't need to know the names of these at all, right? If you don't know the names, it's fine. I do think, however, it's important to understand what it is the different components are telling me at any given time and how they're calculated. Once I have an understanding of what each line is and how it's calculated, I don't really need to know the names. I don't even really need to know the calculations for them as long as I have a general idea of what I'm looking at, and that's what we're going to go over here. So here's how they look. They're labeled here, and we'll go over them individually as well. The first component of the Ichimoku Cloud is the Tenkan-san line. And this is the fastest moving average that we have on the cloud. It's the green line that you see here, and it's very similar to a 10-day simple moving average or exponential moving average. We're looking at 9 periods of data in the calculation for this particular point on the Ichimoku Cloud. And if we take a look at how this is calculated, you can see it's not really a simple moving average. It's also not really an exponential moving average. What we're looking at is the highest high and lowest low divided by 2 over the last 9 periods plotted in the current bar. Okay? So when we're looking at the daily bar, this component is calculated using 9 days of data. When we're looking at the 5-minute bar, it's calculated using 9 5-minute bars worth of data. If we're looking at this with the 15-minute bar, it's calculated with 9 15-minute bars. Okay, so it changes based on the time frame and chart that I'm looking at. Okay, So this is what a lot of traders like to use as a trailing stop or a level to look at for a possible reversal. As you can see, when we break above the cloud, and particularly in this one right here, if I would have trailed a stop at this Tenkan-san line, I'd still be in the trade at this point, right? And that is the fastest moving average, but by itself, it doesn't really tell me a whole lot unless I have something to compare it to, and that's the Kijun-san line. And the Kijun-san line is the highest high and lowest low divided by 2 over the past 26 periods plotted in the current bar. And as you can see, when the market looks bullish and we're looking at an upward sloping cloud and the 9 is above the 26, that's our most bullish looking setup, right? And this is a level that traders can use also as a trailing stop loss. It can also be a clue as to when the market trend might be getting exhausted. For example, if we're trading above the Ichimoku Cloud and the 9 is above the 26, if these two were to cross at some point in the future, well, this might be a possible indication that trend is getting a little bit exhausted. Okay? 26 periods worth of data. If it's a daily bar, we're looking at 26 days. If it's the 5-minute bar, we're looking at 26 5-minute bars. Right, pretty simple concept to understand. The next component of the Ichimoku Cloud is very important because it makes the bound, one of the bounds of the shaded area that we see here. And it's called the Sanku Span A line. And the Sanku Span A is simply a moving average of the Tenkan-san and Kijun-san, but plotted 26 bars into the future. So when I said that the Ichimoku Cloud uses future projections as well, this is what I was talking about. So if we're taking a look at the current bar right now and going down to the Sanku Span A line, that was actually calculated and plotted 26 periods in the past. The Sanku Span A line here is being calculated using today's data. Okay, so this is what makes it kind of forward-looking. And I think a lot of people look at this and say, oh, well then what this is telling me is it's giving me some type of future price projection of where the market can go. And that's not the case. The Ichimoku Cloud doesn't really do anything like that. But what it does tell me is whether or not the trend is sustained, if it's strong, and how strong it is. If the Sanku Span A is above the Sanku Span B line down here, then the cloud is upward sloping. When the cloud is upward sloping, it shows that price has been in bullish territory for a sustained amount of time, and that that price is likely to continue, or is at the very least now likely to continue to remain in that bullish territory. We have a very difficult trend to break, so to speak. But the other bound of the Ichimoku Cloud, of the actual shaded area here, is the Sanku Span B, and it's the longest component of the Ichimoku Cloud, meaning it's the furthest back looking component. But it's also plotted 26 bars in the future. It's the highest high and lowest low divided by 2 over the past 52 bars, plotted 26 bars in the future. Okay? If the Sanku Span B is above the Sanku Span A, then the Ichimoku Cloud is actually downward sloping, and we would say that the trend is not sustained, or at least not bullish. Okay? The shaded area in between the Sanku Span A and Sanku Span B is called the Kuhmo, and this is the actual area that we use to look for potential breakouts. And it's important to understand, how this is calculated, because the Kuhmo can show me that trend is strong or a trend is weak at any given point. The thicker the actual Kuhmo is, the harder it is for that trend to be violated, right? So if we're looking at, an Ichimoku Cloud that's trading, or a market that's well above the Ichimoku Cloud, and seeing that the cloud itself is actually very thin, it's not quite as strong because the market could reverse and chop through that very easily, right? But when we have a nice thick cloud, it shows that the trend is sustained and it's going to be pretty tough to break. It's going to be more difficult to break that trend, okay? Or to reverse that trend into a different, less bullish territory, all right? So the final component of the Ichimoku Cloud, and this is probably the one that has the most, I don't want to say controversy, but the most debate amongst practitioners for its application, and it's the Sanku Span line. And it's something that you sometimes call the lagging indicator. because it is the current bar's closing price plotted 26 bars back. And what this can be used for is really just a final confirmation or check against the rest of the readings that I'm getting from the Ichimoku Cloud as to how strong the trend is at any given time. Okay, so basically, if the market is above the cloud and all of these other components are giving me bullish readings, if the lagging indicator is also above the cloud and also above the price 26 days ago, it shows me that, hey, this trend has been sustained for a while. It's pretty strong, and any setup that I was kind of on the fence about, I'd be able to look at that and confirm it using this lagging indicator. Okay. So any questions so far? Because that covers all of the components of the Ichimoku Cloud, and we're going to kind of go into a little bit more on actual practice and use of the cloud now. But does everyone understand the different components and how they're calculated and plotted on the Ichimoku Cloud here, right? And it's something I always say, the individual components are simply different sets of moving averages, right? And the moving averages by themselves really don't tell me a whole lot. It's when I add them all together and lay them on a chart that I'm able to get some information about what all of these different components are telling me. We always say this about the Ichimoku Cloud: the whole is greater than the sum of its parts. Right? We add all this stuff together, and I get a lot of information about where trend is, when it might be changing, and a whole lot of different looks at the strength of the current trend as well. So why do I want to use the cloud? The cloud is my favorite indicator because it is forward-looking, right? Unlike regular moving averages, fib levels, or other popular technical analysis methods that just give me levels of support right now, the Ichimoku Cloud lets me see a little bit of a projection of where trend, or at least how trend is expected to move in the future based on the strength and price action of current market conditions. Okay, the cloud takes into account a lot more data than simple or exponential moving averages because we have several different components that are looking across several different time frames and using several different calculation methods to come up with all of these, and therefore it gives me clearer levels of support and resistance for setting stops, for setting profit targets, and for timing my entries and exits. Okay. The cloud can be a tool that is accessible and usable for any trader on any plan trading any product, right? Because it's a price action indicator. It uses price action. Now, one little caveat to this statement right here is that the Ichimoku Cloud tends to do best and give me the cleanest signals in markets that are trending, okay? In markets that are trending, I'm going to be able to use the Ichimoku Cloud much better than in markets that are sideways and choppy, right? And that just has to do with price action. When I have markets that are tight and range bound and sideways trading like this, the Ichimoku Cloud doesn't really give me that many signals. It's primarily used as a breakout indicator. And I really want to see markets that trend well on an intraday basis. I'm going to use the Ichimoku Cloud with them. But that's what makes this, again, a really nice and useful tool to use when trading binary options, because binary options are listed in what types of products? Commodities, currency pairs, indices, right? These are all things that tend to trend well on an intraday basis. Not every single day, but tend to trend well, and typically are something that I can use with the Ichimoku Cloud fairly effectively. So obviously we want to talk about day trade setups. The daily bar and the Ichimoku Cloud probably isn't going to give me too much help when trading binary options. Now, of course, there are weekly binary options that are listed. So if I want to put on a short-term type of swing trade from Monday to Friday or Tuesday to Friday or any given day of the week to Friday in a market that has weekly binary options listed, I can absolutely do that. But in general, I and other traders that are using binaries are typically day trading. And that's one of the big benefits of binaries, is that I can day trade in markets that I normally wouldn't be able to trade otherwise. So let's take a look here at how I can use intraday binary options here. And we have a setup in the CME and E-mini S&P 500 futures. So Here we have the first 5-minute bar of the day in the CME S&P 500 futures. 2110.75 is where the first 5-minute bar closed, right here. And on the first 5-minute bar of this day, I would look to get short using binary options. And why is that? Because as the market sells off and breaks below the Ichimoku Cloud here, we've gone from bullish territory to bearish territory. And as you can see, the market eventually did come back, but what it gave me was the opportunity to profit on a quick move lower in the S&P 500 futures. Okay? And this is one of the biggest benefits of using binary options, is that because they give me the ability to trade these intraday expirations, if you understand options well, and I'm not going to get too far into this because it is kind of complicated, gamma is an option component when we're talking about equity options that causes the option price to accelerate quickly or not so quickly depending on how much gamma I have. Gamma is really high near expiration. So because these options expire during the day and have intraday expiries, gamma is very high. So they accelerate very quickly. So that means that a small move in the underlying can have a relatively large impact on the price of the option and the binary option as well. So I can use the Ichimoku Cloud to find potential signals that I can then set up a binary options trade in where I would profit very quickly. So for in this example, because this is a short setup, I need to be a seller of binary options. So a possible trade here with the market, like we said, right around 2110.75 would be to sell the daily binary option on the 2109 strike for 60. So my risk now, because I'm short these binary, is actually going to be $40 per one lot with a potential reward of 60. Because remember, this binary option will either settle at 100 or at 0. So if I sold the binary option for 60 and I know it can settle at 100 at max, I know that no matter what, I can never lose more than $40. And I also know that I can never make more than $60. But this is what makes the short setup here a lot more favorable with binary options than in futures, right? You know, I'm looking at the way that the market has traded today, and there was a 5-minute candle around 11:30 today where the S&P 500, evening S&P 500 futures went from 2020 to about 2025 in 5 minutes, a 5-point rip to the upside. Now, if I had a stop in place somewhere in between there and the highs, I would have been stopped out of the trade. Now the market is right back at 2021. The market is sold off again. If I got stopped out, I would have had to re-enter the futures trade, shorted more futures, or added to my risk in some way. However, if I sell binary options, it doesn't really matter if the market goes from 2110.75 to 2300 in the next couple of minutes or by the end of the day, because I know for sure at all times what my maximum risk is. Okay? And I also know that if that does happen, I'm still live. I can still participate in any return to the downside or any type of retrace because I wasn't actually stopped out of my position. Okay? Where exactly is the entry signal in this example? The entry signal is here when the market breaks the cloud to the downside. And I want to go over some more live examples in markets that you guys give me in the actual Nadex platform once we kind of get through this. But we can also use the cloud and binary options for swing trade setups. So I can use the cloud, the standard options market, and binary options to set up swing trades based on expectations I have for the market. So before I select a binary option strike, I need to calculate expected movement using the standard options market and straddle price. Let's take a look at an example here in the NASDAQ. So we have the NASDAQ futures trading at around 44.50. The implied move of the at-the-money straddle is 59 points. I'm adding the calls, adding the puts to get that 59-point implied move of at-the-money calls and puts. I add that to my strike price to get the upside target, subtract to get the downside target, and then I can use those levels to come up with a trade setup. And this is something that I would be doing when I see the market breaking higher or lower on that daily bar or on something like a 4-hour bar using the Ichimoku Cloud. As you can see, both of these trades have really nice reward to risk setups. They offer me a whole lot of upside with a very defined level of risk versus reward. And I have the confidence in this trade of knowing that my risk is defined at all given times. So this is when binary options versus futures and stocks really start to show their benefits. My volatility and returns might be higher. They don't trade tick for tick with the underlying, but they offer me superior risk management capabilities. They're still options because they offer me this risk management capability that I can't get in the underlying. All options allow a trader to manage their risk better than underlyings. So let's take a look at an example here of a live market using the Ichimoku Cloud and using binary options, and we'll see how much less risk I can take a trade using binaries versus futures. So someone give me a market. Someone give me a futures market that you might be interested in trading using binary options. Any futures market. Crude oil, that's a good one. So let's go to my commodities binaries here, and here's crude oil. So we have a daily expiry option. Let's look at those. So these expire at 2:30 p.m. Eastern Time. So pretty soon, right? In about 50 minutes, in about 50 minutes, these will expire, 45 minutes or so. Let's say that I wanted to see what the Ichimoku Cloud was telling me about the crude oil market right now. Well, I would get my ladder chart out. And here we have the crude oil market. And the Nadex platform makes this very, very easy to do. I can pick my bar size. I'll use the 15-minute bar. And then to add the Ichimoku Cloud, all I have to do is click Technical and click Ichi. And boom, there it is. So what is the Ichimoku Cloud telling me about the crude oil market right now? Are we in bullish or bearish territory using the Ichimoku Cloud? Is this a bullish or bearish trade setup? Yeah, we're in bullish territory. Now, in an ideal world, I would have, waited for the market to sell off below the Ichimoku Cloud and then come back above it before I got long. But let's say that I look at this and say, you know what? I think this looks like a pretty decent trade setup here. I want to get long, and I want to do so in a way that I can set up a trade that gives me the ability to risk a lot less than in the futures. So let's say that I want to go ahead and look for some more upside here. The market's at 50.39 right now. The 50-50 strike binary options are trading 32 bid at 38. Okay? So let's say that I buy these, and I'll put a bid in here for 35. If I get filled here at 35, what am I getting? What is my trade setup? Well, I'm risking $35. And all I need is the market to move from 50.36 to above 50.50 in the next 45 minutes. And how big of a move is that? Is that a big move for crude oil? Is 14 cents something that we wouldn't expect the market to do in 45 minutes in these futures? No, 14 cents is pretty small, right? 14 cents is a pretty small move. We would totally expect the market to have that type of capability to move in 45 minutes. But what is my trade setup? If I get filled at 35 cents, I'm risking 35 to make 65. So I'm getting almost 2 to 1, about 1.85 to 1 on my money for a very small move in the underlying future, right? If I bought the future here at 50.36, if I wanted to get 1.5 to 1 on, or 2 to 1 on my money on a 14-cent move, I would have to have a stop, 7 cents lower. That's going to be pretty choppy. Would I be confident that my trade will have really any type of staying power or be able to participate if I'm only giving it that much room to the downside? What do you guys think? Yeah, it'd be pretty tough, right? I probably would get chopped up. Yeah, I'd probably get chopped up more often than not, right? And if I bought the futures in this the binary option, I know that my maximum risk is 35, and to hold this position, I just need that $35, right? If I were to go ahead and do this with the actual future, what would my margin be to hold that futures contract? Well, it depends on who your broker is, but in general, it's pretty expensive. I think in most brokers, one crude oil future might require about $3,000, $3,200 in margin to hold one contract. And again, I'd be looking for a very small return to the upside. Now, this isn't the only benefit of binary options, right? The other benefit is the choices that I'm given and the ability I have to put on different types of expectations and express them using the binary option. So let's say that I looked at this chart and I said, you know what, we're above the cloud, but really because I didn't get in time to catch the breakout to the upside, all I want to do is say that we're going to hold above the cloud through expiration, okay? Because here's the cloud, and this is what's really nice about the binaries. Here's the top of the cloud, right? This should be support. We're above the cloud. This should be the line in the sand for bullish and bearish territory. And look at this. We've got a binary option that lines up exactly with the Ichimoku Cloud, or almost exactly. So let's say that I want to say I am not expecting a huge move to the upside, but I am expecting the market to stay above the cloud between now and the next 45 minutes. Well, I can go ahead and put in a position like this. I'm going to buy this binary option for 85, the 50 strike binary option. Now, this means that as long as we're above 50 on expiration, it's going to go to 100. So I'm risking 85 to make 15. It doesn't sound like the best reward to risk setup in the world, right? But it is still nearly an 18% potential ROI on my risk. And also, I don't actually need the market to move. If I got long futures here, the only way I can make money is if the futures move to the upside. If I get long this binary option, not only can the market move higher, sideways, it can also move lower as long as it doesn't go below this strike price, and then the option will settle at maximum value. So I can take a aggressive or more conservative view on the underlying using the Ichimoku Cloud and binary options and express a whole bunch of different views on the same underlying market and construct a risk versus reward setup that I'm really comfortable with regardless of what my risk tolerances are. Everybody in here has the ability to do that. And, you know, we're going to talk about different markets here. You know, let's take a look at something in indices. Here's S&P 500s. Here's the daily options expiration for the 4:15 Eastern Time expiry. Take a look at all the ways that I can trade these. Let's pull them up here with the Ichimoku Cloud. Again, I'll switch this to the 15. I will put the Ichimoku Cloud on it, and what do we see here? Hey, looks to me like the market is trying to break above the Ichimoku Cloud, right? We were below it. We had been for quite some time. Look at this. See, this break lower here was an amazing signal, right? If I would have gotten short there, I mean, that was pretty late last night, but I would have gotten short there, I would have seen a whole lot of downside, right? But here we are now moving from bearish into bullish territory. So I can use all these different options to express a bullish sentiment in the futures. And what makes this really nice in the Nadex platform is I can literally just look at the lines on the chart and see where these strike prices line up relative to the highs and lows of the day, relative to the Ichimoku Cloud. Look at this. Here's a binary option that is lining up perfectly with the top of the cloud right now. If I wanted to get long and play the breakout, I can trade this one and just say, hey, this expectation says that we're going to remain above the cloud between now and the end of the day because we broke out above it here. I can say, all right, well, let's say that I'm, just not necessarily saying that we're going to stay above the cloud, the top of the cloud, but that we're not going to break below it. Well, hey, look, there's a strike that lines up with that too. So it's really kind of the most natural indicator for trading binary options, in my opinion. And you can see just how simple it is to kind of apply this to a trading plan on a regular basis. So I want to take questions from you guys because we're almost we're running a little short on time here. But before I do, I want to give you guys the chance to get our ebook on the Ichimoku Cloud. The link here is alphashark.com/cloud. This is actually a pretty lengthy ebook that goes in detail on the Ichimoku Cloud and all the different components. Like I said, with only 1 hour to talk about this, I really couldn't get into as many examples as I would have liked to, or all of the minutiae surrounding the cloud. And what I think the biggest value in this ebook is that you get an explanation of the different time frames that should be used for different types of products and how fast the cloud should be trading at any given time. In the next few hours, it still might go below the cloud. Well, of course, absolutely. But the Ichimoku Cloud gives me an indication of when a market is breaking through resistance that should then see some follow-through. Of course, I mean, I'm not saying that just because it's above the cloud, it's 100% going to remain above the cloud, but that's my expectation based on the technical indication, right? And because binary options give me a bunch of different ways to express that view, I can set up a risk versus rewards trade that gives me a lot of different flexibility and approaches to really what is the same idea that the market's going to stay above this particular level or go higher from this particular level. So the ebook you can get here at alphashark.com/cloud. It's completely free. I think if you went to Amazon's like Kindle store, it might actually be like $10 or something, but you guys can all have it for free. It's really, really good. And also, if you get this ebook and sign up for the ebook now, we're going to give you guys the ability to receive some more information on a binary options bootcamp that we are having next week about trading binary options and using the Ichimoku Cloud. And yes, this absolutely could be applied to Nadex spreads as well. That's something we'll be going over in the bootcamp. And the bootcamp's actually 2 days long. So it's going to be pretty intensive and quite in-depth on using the cloud and using binary options to trade different cloud types of trade setups. So yeah, it's going to be good. It's going to be 2 days long. I will be hosting it. It's going to be a rather lengthy boot camp and workshop. I think you guys are really going to enjoy it. So any questions right now? Any questions? We have about 7 or 8 minutes left. I'm going to go ahead and give you guys a minute to put some questions in here. So just feel free to type some questions in, and we'll get to those in just a second.